let's make myself small. Yep, small Matthew, beautiful. So you can have a look here. I've just put together a little transaction of starting balances, some analysis charts, and some footing. So let's go. So starting balances, we've got bank, which is 35,000 in debit. So that 35,000 debit, that's significant because bank's one of those assets that is one of two assets, can be an asset or a liability. The other one is GST, whether or not we're owed GST or we owe the government GST. We don't do GST until I think a week or two from now. So once we do GST, that'll flow in a bit more. So for bank, just make sure you pay attention to debits or credits. We've got inventory, 10,000 debit, it's always a debit. Premise, 200,000, always a debit. It's like vehicles, always a debit. It's 200,000. And accounts payable, 11,000 credit, always a credit because it's always a liability. So quick sidebar here, make sure for bank you're paying attention to debit, credit. If it's credit, you know it's a liability on your balance sheet. It's bank overdraft. It's like a little heads up there, like a little thing to be aware of. Now, other thing I want you to be aware of, having a look here, bank. See how it says bank, and you've got bank bracket A. That's to tell us that's an asset. If you go here, you have a look, it's accounts payable. You see there, accounts payable bracket L. If that's never in your book or never in the exam, do that yourself. I think that's like one of the best things you can honestly do. And it makes your day, it just makes it a lot more doable for you. So just a nice little, I guess, reminder or hint there. On top of that, we've also got a trial balance. I'm going to talk you through the trial balance and where it links into footing and how to foot. So without further ado, I think we're good. We're going to start by putting in the opening balances. Let's see. So the first one, bank. So we're going to go first. We're going to go balance, and it's just 35,000. You just put it where it says. So see how it says 35,000 debit. I just go to the debit side, and it's right there. Now, always remember, debit is on your left, or screen left, or book left, whatever, and your credit's on your right. So debit, credit. Just please remember that. Even if you, at the top of your page, what I used to do, it's a bit hard to demonstrate here, but above the date, I would always write D here. So I'd always have, it's a little hard to demonstrate. I'll just put a little text box just to show you what I mean. A little sample text box. I'll just put a D, and that would just go here, just so I know, oh yeah, that's debit. And then for credit, it'd be the exact same, where I go, okay, that side's credit. That's about it. Now I'm going to get rid of that because that looks absolutely garbage, but I think you get the general gist of that. Inventory is 10,000, obviously first balance. Now, whenever you open or start a new month, or you got to put the balance in, you just go balance. You don't need to put anything special. It's just balance. Now, when you put a full set of books in, it's obviously going to balance. This is like very much an extract. So what would happen is, to balance this out, you would have capital, and the balance would mean A equals L plus OE, and or debits equals credit. And that's where the term balance comes from. So anytime you have to start a general ledger from scratch or carry it over to a different month, it's balance. We've got premise. So again, it's an asset, non-current asset. We just go balance again, and 200,000. Accounts payable 11,000 credits. So this time we're on the credit side. We just go balance and we go 11,000. Nice and simple. So that's how we put our opening balances in. Chapter, I believe it's 5 or 6. I'm tending to lean towards 5. We actually need to open up and convert from a single entry into a double entry. What we're doing here is double entry. I'll show you what I mean in a moment. But we need to convert, so you need to be aware of putting balance in. So make sure you're aware of that. All right. So I'm going to show you what I mean by double entry. So on the first, we purchased inventory. It should be purchased. You can tell my grammar. You can tell I'm not great because my grammar is absolutely disgusting at the moment. We purchased inventory worth 25,000 using cash. So the first account that's affected is inventory. We classify it as an asset, and it goes up because we started with a little bit. We get more. Obviously, that asset goes up. It's an increase. Let's. That's gonna annoy me. Let's get that aligned. And how much does, if it increases, remember, if assets increase, it's a debit. If liabilities and owner's equity increase, it's a credit. And then it's, if it decreases, they swap around. So I'll show you what I mean in a moment. 2005 or 25,000. Now, I go bank. That's also an asset. It goes down because money's coming out of my business. It's a decrease, 25,000. And we see here, debits equal credits for that transaction. So we're good. We're good. We can leave it. Now I'm going to leave a space here. You don't need to worry about that space. Make sure it's bunched up when you're doing the book because they normally don't give you that space. For this one, I'm sort of doing the space just so you can see it a little bit more. We paid 5,000 to accounts payable for a purchase done during the previous month. Jeez, you tell I was really doing well when I wrote these. All right, so we know that we paid accounts payable. Cool. So first thing I'll put is accounts payable. I know that's a liability. It's always a liability. If you're ever stuck, you can just look here and see which one it is. Now, I know that it's going down because we're paying it off. We owe it, we pay it off, we owe less. That's sort of the logic behind it. Now, it's a liability. Remember, if liabilities go up, it's a credit. If they go down, it's a debit, or a decrease, it's a debit. So it was 5,000. And bank, oh god, why is that not italicizing? We already know bank's an asset. Even if bank starts as a liability, always just treat it as an asset on these analyzing charts. Decrease, it goes down, and 5,000 credit. Now, I want to do a little trick. Just want to show you a little trick. Just a little Don trick here. I'm going to do another text box. I just really want to emphasize my point here. So we'll make a table. A equals L plus OE. Make it too deep. All right. Assets. Liabilities. Owner's equity. All right. Just a little idea. And this is how I learnt to remember all this. See how A equals L plus OE. Just a little note there. So if the assets go up, it has to be a debit. If liabilities or owner's equity goes up, it needs to be a credit. Now, I have seen on your exercises revenue. Basically, revenue, just treat it as expense. So profit, okay, R minus E. So, for example, expenses makes owner's equity go down. That means by that logic, owner's equity goes down, needs to be a debit. Likewise, revenue, that makes owner's equity go up because revenue go up, profit go up, thumbs up all round. Obviously, that needs to be a credit. I think that's like a nice little thing. I would almost be putting that in your book in some iteration, because that's what I did back when I was in year 12. That's like the way I learnt it. It may not work for you, that's okay. It's a suggestion. So I might actually leave that there. I think that might be a good shout. Let's move on to transferring these analyzing charts into the general ledger. So we'll do the first one. All I need to do is just go, all right, what happened on the first? Copy, paste. So I go inventory, debit 25,000. Cool. So I just go first. I don't need to write the first again because it's already there, but I will just to, be a good boy. We go in, what's my cross-reference? Cross-reference is the other account affected. It's always the other account. Now, if there are two, you would just go /GST / I don't know what else there would be. I think it's only GST that applies for, and like some very niche circumstances like discount, rev. But I'll point that out. But basically, if you have to reference two things, it's just a /, plain and simple. But we'll talk about more of those when they come up in, I believe, chapter 4, I believe. Let's go 25,000 though. And then first, inventory 25,000. Nice and simple. That's one transaction done. So common mistake that occurs here is people try and be creative and they do all the debits and then all the credits. And that is, hands down, the absolute dumbest way to do this. Do it transaction by transaction, because you're just going to make yourself miserable. I cannot emphasize enough, do it transaction by transaction. Like, even if you only have to do parts of it, check the first for any, do them that way. And I'll show you what I mean when we get into exam revision, where you may have to do, where you get like a list of transactions and you only have to do, say, inventory, GST, not bank, and accounts payable. I'll show you how to deal with those, but my advice is do it transaction by transaction. It's just going to make your life a lot easier. All right, let's go and do the second. So the second, we see accounts payable. We see it's a debit, 5,000. And the cross-reference is bank again. And then I go look at bank, decrease, credit, 5,000. Okay, now some interesting little sidebars here, just while I'm just observing. First thing, notice how it goes debit, credit. So, whoops, that cross-reference is wrong. So let's say I want to go, this here, what? I can double check my work and go, it belongs here. That's why we cross-reference, okay? So you're always cross-referencing the other account. So here, inventory, I know, I look at my bank, I go, I spent $25,000 on inventory. If I look at my inventory, I know, I paid $25,000 cash for that inventory. Just, it's those little things. Okay, so how do I foot? Now, footing is quite interesting. I think footing is interesting. So we add up both sides. We make a mental note. You don't have to do anything on the paper. It's just a nice little mental note. I was going to show you balancing, but I want to show you that face to face. I don't believe balancing's in your textbook for this part. I'm just going to have a look. Oh, no, you have to balance. I will show you balance. My mistake. All right, I will show you balancing after footing. So I need an extra row here, extra row there, extra row here. That one, inventory's good. Cool. All right, so let's foot bank. Let's look at bank. We go, okay, how do we foot this? All right, so we see the debit side, 35,000, credit side, 30,000. We go to the bigger side, we put in the difference, and we put it, we put it on the bigger one, and then we circle it. Now, I couldn't draw a circle on the go, so this is the easiest way. Now, I'm not exactly known for my artistic skills, so just, give me a break. So we got 5,000 there. Now, if we rinse and repeat, we see here it's just 35,000, and we just pick up, go from there. Nice and simple again. For premise, I'll come back to that. For accounts payable, 11,000, 5,000. Obviously, the difference is 6,000. Now, what about this 200,000? Now, there's nothing there, so it seems really redundant to rewrite this. So all we do is, if there's only one transaction, you would just circle it. That's it. So that's okay. Okay, I don't know what I've done here, but I think I've broken something. Oh, no. Yep, we're good. So there we go. So if it's only one transaction, you just need to do that. Now, lastly, balancing. So we're going to get rid of all the circles. Going to go back, going to go back, going to go back, going to go back. All right, we got rid of all the circles. We're good. So what I want to show you now is how to balance. So balancing is getting debits to equal credits. So I go whichever one's the biggest, 35,000. Cool. So we'll go end of month. We'll say 31st. We'll go 28th. But whatever the end of the month date is, 28, 30, 31. There will never be a 29 though. We go balance, and then we go which side's bigger. Now I know 35,000 is bigger, so I put 35,000 here, 35,000 here, and it's just 35,000 minus 25,000 minus 5,000. What's the difference? 5,000. Okay. And then for the next month, we go first, and we'll go balance 5,000. You transfer that. I'll get an arrow up just to show you a bit more. Shapes, I need arrow. That transfers through to there. So the balance goes across, so so you can see here 1st of March, for example, if this was 1st of Feb, but I think you get the general gist. Month 1, month 2, you transfer it across. Other pro tip, make sure you underline under both of these. That way you know, oh hey, it's done. I've balanced that off, new month. Okay. Inventory, it's the exact same process. I go, okay, 35,000. I see 35,000's the V0, 28th, balance 35, 35, and then we go first, balance 35, and again, it's just that nice little arrow you see, it transfers across to here. That's how you balance and transfer. Now, premise, exact same concept. You would do the exact same as you would for inventory and so on. In higher up level accounting, you can just go down. You don't even need, like, if there's no transactions, generally you won't need to do anything, but better to err on the side of caution. Balance 200,000. Now, you don't need to do a sub add here because there's only one transaction. I think that's an important note here. Like, you don't need to do a sub add. You can just go like that. You don't need to do the add because see how here there's been multiple. See how like there's been transactions where you have to sub add. This one, no transactions where you have to sub add. It's just the one item. You can just do a direct transfer across. Liabilities, when it's the other way around and the credit's bigger than the debits, all the balance does is go balance. Oh, I need to add one here. I'll just do that now. So we go balance. We see, oh, it's 6,000. We see 11,000. 11,000. Remember, we always take the bigger side. Debits need to equal credits. And then we just go first, balance, and 6,000. There's your arrows doing their thing again. So it's just transferring across, nice and simple. Now, if I was to do a trial balance, all I'd go to is I look at each account and I go, okay, what's the balance for each? So balance, so I go bank, accounts, payable. Generally you should, geez, I'm really off my game today. Inventory and premises. Obviously this will balance. These are an extract, so don't be too concerned. Obviously it's not going to balance, it's an extract. 5,000. Inventory, you'd have a look at, you go 35,000. You're just grabbing the balance. And premises was 200,000 and accounts payable was 6,000. Let's get that. Let's get those aligned. Now, if you wanted to demonstrate are these balanced, the simplest way, I will show you what I mean by debits equal credits. So if we go capital person, and I need to put another row below, I could just go, okay, what's the capital? And I see that it'd be 234,000 because both sides would be 240,000. That's how you do a trial balance. It's very rough, but the idea is you want to be catching out those errors. As long as you go transaction by transaction, this all fits. Oh geez, my voice is going. So thank you for being patient with this. It is a pretty awkward time. We are trying to, but as you know, we are trying to make it work. If you need this document, please send me a message on WebEx. I'm not going to add it to the lesson plan just because it's like a bit of a walkthrough document. Doesn't really work without the video. But if you've got any questions, please send me that. Otherwise, I'll see you soon. Bye.